Right. The other important news to watch is what's happening at Nestle. Nestle's parent had actually asked for higher royalties, and when they had taken this proposal to the shareholders, shareholders have rejected this. That license fee should be raised from 4.5 to 525 over next 5 years. That was a proposal in April, and now the shareholders have rejected it. What does it mean? How important is it? Abneesh Roy, who's executive director at Nuvama Institutional, is joining us to explain this to us. Abneesh, how do you read this development?
Yeah, thanks. So clearly a positive in the short term. The investors have voted very clearly, almost 70% plus majority shareholders have voted against this. So for now, the 15 bips increase for the next 5 years doesn't go through. Of course, we need to see if the Nestle board comes back with a revised proposal. That is a monitorable. But in the near term, this is a clear positive. And this again shows that shareholder activism is extremely alive in India. And we do see that Nestle now will be able to really protect its EBITDA margins and gross margins, because 15 bips although looks small, but it has to be seen in the context of high inflation currently being seen in coffee and cocoa cost, which is a raw material for Nestle. So it was that way not very well timed given the raw material pressure which currently Nestle is facing. However, given good monsoons this time, 6% plus expected than the normal, we do see other raw materials for Nestle to cool off. For example, dairy, because more fodder will be available, sugar and wheat also. The crop seems to be better than last year. So I would say post the Q2, the margin profile for Nestle should again start improving, and near term, the pricing power is there for Nestle. So the coffee and cocoa cost, a lot of that can be passed on. Now, one or two questions I think investors will have whether the Nestle board comes back with a revised proposal. That is something we need to see. Second is, given the parent did not get the hike, will there be any change in terms of support to the Indian subsidiary in terms of new product launches, innovation, R&D support, etc.? We don't see that should be a concern, given India is obviously one of the most important consumer market for any multinational company. Second, Nestle parent anyway is getting 4.5% royalty. So not introducing product or not giving support doesn't look logical at all. So net near-term positive, and definitely we remain maintained by with a target price of 3010. But the next monitorable will be the FSSAI regulations on sugar content in the infant food. We again don't see Nestle really facing any issue, because it is having very high standards of quality control. What we see there is the regulator changing the guidelines gradually and reducing the sugar content. So that will be a gradual process, and all the players will get time to implement that. So we maintain a buy and remain positive on the company.
Okay, so you don't see any FSSAI issues as well, and you have maintained a buy call on Nestle. Abneesh, a two-part question. Will you be changing your estimates on account of this, baking in back the loss margin of that 75 bips over the next 5 years? And secondly, are there any other such companies as well which have impending shareholder approval, the likes of HUL, etc., where you think this shareholder activism can play a role?
So in multinational companies, this is a issue. It keeps happening over a period of say 5 year, 10 year, which every company follows. Now coming to Nestle, if you see, it's a 15 bips increase every year. So it's not a very strong quantum in the first or second year. Over a 5 year, it becomes more meaningful, 75 bips. So as I said, we need to see if there is a revised proposal from the board. Till then, I think we need to wait for that. But first and second year, 15 bips and 30 bips, I think on a 24-25% EBITDA margin, 15-30 bips is not a big quantum. So it's more of a directionally, sentimentally positive. I think numbers-wise, 15-30 bips is a small number on a 25% EBITDA margin. So I would say numbers slight uptick can happen, but the board approvals will be needed. And coming back to a question on other companies, I think HUL already the approval has been passed, so that is done and dusted. And in their case, it is anyway lower than the current 4.5% royalty number of Nestle. So HUL is on the lower side. But yes, now other companies which want to increase whenever that time contract ends, I think now they will be more careful, given this will be a precedent in their minds also. So this is a good development for the minority shareholders.
Point taken. But since you are with us, Abneesh, also talk to us about Zee Entertainment. I understand you upgraded that stock. What's the rationale there? What have you increased your target price to?
Yes, so definitely the stock has corrected one way from the Sony deal getting called off. So almost from 240, 250 level, it had almost become half at 135. So valuations became quite reasonable. Second, of course, in Q4, I think a lot of the growth numbers, metrics were positive. So we did see that advertising saw 10% plus growth, YOY, subscription revenue saw 12% growth. I think obviously for any media company, advertising and subscription are extremely important. The third revenue stream of the movies, etc., which comes in the other sales and service, that can be quite cyclical and quite event-based. So that was down, but that's a small revenue base. So EBITDA margins also, there was an expansion. So EBITDA growth was 38%. So my sense is company is now taking the right steps in terms of cost control. Slight issue in the near term can be that whenever any company takes cost control issue, there can be one-time severance pay, etc. For example, tech team of Zee, they are rationalizing that. So whenever that happens, obviously there will be one-time cost of the severance pay. But over a medium long term, it's a positive because company will become more efficient, more focused. So I would say worst is behind for Zee from medium long term. It will be a very volatile stock given low promoter holding. It's a sector in which media disruption is high. But at this kind of evaluation, I think the stock could give near-term gains. We have a target price of 180. There's no change in our target price. It is just that the stock had corrected so much, so that's why the upside came. But definitely the valuations are reasonable. And medium long term, we need to see if there can be any more strategic partner or buyout, etc. Given the promoter stake is only 4%, but that will take time. Near term, clearly numbers are improving and valuations are reasonable. FMCG companies, clearly growth metrics are improving. Almost every company is saying that outlook for rural growth is improving. And for Zee, obviously, FMCG is the biggest sector of advertising, almost 50-60%. So clearly outlook is improving for the revenue.
Okay, Abneesh. All right. Thanks very much for sharing your thoughts on Nestle and Zee. Clearly, risk reward is favorable, valuation is favorable, outlook has improved. So let's see whether the street buys this argument. Otherwise, it's become a 220 to 130 kind of range. Comes back on the bad times, goes back in the good times. But let's see whether really some re-rating moves happen on that. Sanjeev, you've been a follower of Zee also for some time. Has it been disappointed you?
Yes, Ajay, both Zee and Paytm were big disappointments, but we looked over, booked out and got into better names. We still think Zee is an avoid. You cannot have this type of ruckus which was created by the management. 2 years you misled promoters, bankers, creditors, and in the end it came to be a damn squib. I think the environment has changed. The new deal which Reliance has got into is a very big positive with Disney. And for them, the cost overrun means return on capital, return on equity will be very, very difficult. So I would say totally avoid Zee. The other stock which you mentioned, Nestle, is in our portfolio. We are very bullish on Nestle. We think this is a harbinger of what, aspiration and demographic premium is growing. And in tier 2, tier 3, it is only expanding. So Nestle is a stock which we have a buy on.
Okay, point taken. Thanks, Mr. Bhasin, for that. So Nestle remains a stock which is there in their portfolio. Zee, however, has been a bit of a flip-flop. Let's take a short break on the show. When we come back, we'll discuss with our battery of guests, Sanjeev Bhasin, Kunal as well as Nuresh, as to how the market setup is looking like. Because for now, it's pretty much flat, not big moves at all, with just around 22,500 on the Nifty.
If you like this video, then like, share and subscribe to ET Now.